Hello my fellow investors and welcome back to another earnings report video. And as I promised guys, if you guys haven't seen the video from, well, technically today as if I'm recording this, on the company Jackson, I did mention there that I wanted to start making 3 videos a day. The 7 a.m. one from Mike, and then a noon one from me, and then the one at 4 p.m. like normal from me again. And I wanted to do the one at noon for companies that just have earnings this week, because I don't want to skip on them as well, but I also don't want to just ignore your guys' recommendations for, you know, so many days and then they pile up. So I want to do 3 for me 2 videos. The channel will have 3 videos popping up every single day, hopefully. So let's actually get started with this kind of new format. And the company that we're going to cover for the noon segment, guys, it is the company Chewy. Now, I have done this company before in the past, and I've I like my doges. I like the fact I really do like companies that make dog food and cat food, because I think this is going to be a pretty big industry in the future. Something's just telling me that based off of the current circumstances when it comes to millennials and Gen Zs, something tells me that we're going to have a lot more reliance with animals, as in like dogs and cats, in the very near future. I would say about like 20 years or something like that. So I really do like my dog food companies and cat food companies. However, when it comes to Chewy, I personally prefer more Schmuckers corporations. Instead, they have better fundamentals, so that is what that is. But nonetheless, though, I still do like the entire industry. So let's actually go over Chewy's fundamentals, Chewy's earnings report, and also figure out if at the current share price this is looking like a buy. So with that said, let's get started with this analysis. So let's take a look at these earnings summary. Here on Seeking Alpha, we got EPS normalized actual came in at 5 cents, beat by 15 cents. If this is a beat by 15 cents and this actually came in at 5 cents, guys, they were expecting a negative number. That's crazy. Actually, we can even see this here on the upcoming earnings, negative 4 cents. So yeah, they were definitely expecting a negative value when it came to this. EPS gap actual came in at 1 penny, beat by another positive 12 cents. Revenue came in at $2.71 billion, which is a beat by $58.56 million. So now let's jump into their earnings report for the 4th quarter of 2022, as well as the entire year. And like always, guys, this will be linked in the description below for you to read for yourselves, which I highly encourage you to do, because I'm not going to cover this whole entire thing. It's really long and we don't have all day. So let's actually get started with this. Fiscal 2022 4th quarter. I'm going to zoom in a little bit just so that way you guys can see a little bit better. Hopefully that is a lot better. Let me zoom in a little bit more. There we go. That's a lot better. We got fiscal Q4 2022 highlights. Net sales of $2.71 billion, improved 13.4% year over year. Okay, that's actually really, really good to see. The fact of the matter is that not only are they beating analyst estimates, but 13.4% year over year increase, that's really, really good. Gross margin of 28.1% expanded 270 basis points, which, by the way, that is 2.7% year over year. Net income of $6.1 million, including share-based compensation expense of $50.2 million. Net margin of 0.2%. expanded 290 basis points year over year. Basic and diluted earnings per share of 1 penny, an increase of 16 cents year over year. Wow. Okay, so they were, so that means that in 2021 they were at what, negative 15 cents, and right now they're at positive 1 penny. At least they're heading in the right direction. Adjusted EBITDA, not EBITDA, EBITDA of $92 million, an increase of $120.1 million year over year. Adjusted EBITDA margin of 3.4%, expanded 460 basis points year over year. Adjusted net income of $69.6 million, an increase of $117.4 million year over year. And adjusted basic diluted earnings per share of 16 cents, an increase of 27 cents year over year. That was Q4. Looking at now fiscal 2022, we pretty much got the exact same thing, just at a much larger scale. Again, you guys can read this for yourselves. The link is in the description below. I actually want to come down here into the CEO's comments. Quote, our 4th quarter and full year fiscal 2022 results cap an incredible year. Against the backdrop of a rapidly changing operating and economic environment, i.e. inflation, Chewy produced record high revenue, profitability, and free cash flow. Okay, now I'm listening now. Said Sumit Sin, Chief Executive Officer of Chewy. Chewy's disciplined execution and dedication to serving pet parents Pet parents, okay. And partners with a widening ecosystem of offerings led to another year of market share gains in the pet category, which continues to demonstrate its resilience in the present environment. All right, so short, sweet, and to the point. I don't really know what to say much of that. Now, if we actually come over here, guys, to their summary, we can see something very, very interesting. For starters, when it comes to the net income loss, January 30th, 2022, it was negative 63, I believe this is millions since this is in thousands, negative $63.61 million. And as of January 29, 2023, is $6.1 million. So that's a massive just difference overall, right? And we're even seeing this here on the 52-week ended as well. In January 30th, 2022, it was 73.8 million, sorry, negative 73.8 million. And then in January 29th, 2023, a positive $49.23 million. So that's kind of interesting. And we also see this in regards to the adjusted EBITDA. We went from negative 28 to positive 92. And when it comes to the net sales, you can see a massive increase as well, going from 2.4, I believe this is billion, 2.4 billion to 2.71 billion. So overall, this is looking very, very interesting as a whole. Now, with that said, so let's come over here, guys, into the calculator. We got the ticker symbol for CHWY, market cap of $14.79 billion with a PE of NA. Now, this PE of NA doesn't necessarily mean that the calculator isn't working. However, it just happened that the calculator just stopped working. Let me just refresh this really quick because apparently that happens sometimes. And this is apparently not going back. But nonetheless, though, the reason why the PE is NA is not because of the fact that the calculator isn't working like right now. It's mainly because their net income is actually in the negatives, unfortunately. We're going to take a look at this in regards to their fundamentals in just 1 second. But just understand that this is the case. Now, unfortunately, this is being really dumb right now. And the thing just isn't want to refresh. And actually, never mind, I actually just got it to work. So the share price, guys, it ends up being $34.93. Coming over here now into the graph, we can see that on the 1 year, they're down 24.31%. Year to date, 1.5% down. 52-week range is $22.22 to $52.88. So not 52-week lows, but definitely heading in that general direction. Now, they do not pay out a dividend, which is actually a good thing, because taking a look at these free cash flows, guys, they're not good. The 5-year average free cash flow, it is negative 35.82 million, and the last year's free cash flow, it is negative 1.6 million. So good thing that they do not pay out the dividend, because that would be really bad to see. But nonetheless, though, negative free cash flow, that's a major red flag from the very beginning. So let's come over here and take a look at their fundamentals. Remember when I said NA means that the net income is negative? Well, here it is. Net income from 5 years ago, we got negative $338 million to 1 year ago of negative $73.8 million. That is an increase of 78%. Now, to their credit, I have to give them this, to their credit. Look at this. Even though it's in the negative, guys, it is consistently increasing. That's actually fairly surprising, because now I'm at a dilemma. Normally, I would like if this were to be positive. But the fact that they are consistently increasing this, even though they are in the negatives, the fact that they're consistently increasing this gives me a little bit of hope, I guess you could say. So I had this as a 75. I'm actually going to put this, as a little bit lower, as like around like a 65, because I just don't feel comfortable with all of this being negative still, though. That's my main issue. Even though it is consistently increasing, it's still negative. I don't feel comfortable. Coming now into the free cash flow, we got 5 years ago of negative $120 million to 1 year ago of negative $1.6 million. Now, this is an increase of 99% with an average of negative $35.82 million. If you take a look at this graph, this is very interesting, because they are increasing it. Don't get me wrong. They are increasing their free cash flow. And 2 years ago, they actually went positive. $2.1 million in the positive, to be exact. However, as of 1 year ago, they went back into the negative to negative $1.6 million. So this is a case where they're pretty much at zero. They literally have zero free cash flow, essentially, when it comes to this kind of graph, right? That's kind of concerning, so I'm going to give this a 35%. It's not zero, because, I mean, they are still increasing it, but it could be a whole lot better. Looking now at the revenue, this one's actually looking the best out of all of them, and by the best, I mean perfect. 5 years ago of $2.1 billion to 1 year ago of $8.9 billion, increase of 322.51%. And you can see really nice, consistently increasing, staircasing as it may were. It's been a while since I've used that word. And I'm going to give this guys a 100%. Assets minus liabilities, very similar to that. Well, actually, it's not very similar, but it's somewhat mimicking that of the free cash flow. You can see that it is negative from 5 to 3 years ago and consistently going down from the time frame. And then as of 2 years ago, they went negative but near zero to negative $2 million, and then 1 year ago they went positive $14.8 million, and as of today they're up to $164 million in the positive. That to me is all over the place. I don't necessarily like that. It's not consistent, right? I mean, they were consistently decreasing from 5 to 3, but then out of nowhere they shot up, and now they're in the positive. This is way too much for me. Average total assets, it is $1.56 billion. Average liabilities is $1.7 billion. New with the difference, we get a negative $112.64 million. I'm giving this guys a 10%. Looking at the cash flow minus the liabilities, this is absolutely awful. It's consistently decreasing year over year. It's just getting further into the red. As of 1 year ago, it is negative $2.1 billion, and the average, it is negative $1.4 billion. So the 1 year ago is way worse than that of the average, so I have to give this a 0%. In regards to now the shares outstanding, unfortunately, Seeking Alpha does not have the 5 and 4 year ago value for this, but we really don't need it. And here's the reason why. 3 to 2 to 1 year ago to even today, shares have been consistently increasing, going from 401.4 to 415 to 420, nice, and 423.1 million shares. So consistently increasing at a rate of 0.71 within the past previous year to the current year. This is looking at 1 year ago, 420.1 million shares to 423, and it's kind of mimicking that even throughout, the past couple years that we do have data for this. Guys, consistently increasing. I do not know these numbers over here, so I have to give this, okay, here's the thing. I gave this a 0%, but I'm looking at this now and I'm just like 0.71 year over year, at least from the previous to the current year, isn't a lot. But at the same time, I think they're just going to continue doing this because they don't have any cash flow. But then again, they are at least getting into the positive free cash flow, kind of staying at zero. So you know what, I'm going to give them the benefit of the doubt. I'm going to give them like a 5% when it comes to the shares outstanding. It could be a lot worse, I guess you could say. And lastly, when it comes to the cash and equivalents, they currently hold $378.2 million with an average of $320 million. When it comes to the overall grades, we gave them the income of 65%, free cash flow 35%, revenue 100%, assets minus liabilities 10%, cash flow minus liabilities 0%, shares outstanding of 5%, overall grade of 44. They have problems, guys. They really do have problems, and free cash flow is the main one. It's just bad. It really is. Like, net income, don't get me wrong, is in the negative, but at least they're increasing consistently. This is just awful over here, and this asset minus liabilities is awful too, and cash flow minus liabilities is also awful as well. The problem is that companies use their free cash flow to pay down their debts. They don't have any free cash flow. They're at zero, right? Okay, at least they're no longer in the negatives, but they're at zero. They don't have enough to take away this liabilities. That's why I'm like, I don't know where this is going. Therefore, I'm giving it a 44%. So with that said, guys, let's actually see if at the current share price of almost $35, this is looking like a buy. Now, let's make some revenue growth assumptions of 6, 8, and 10%. And well, if we come over here to Seeking Alpha, this is why I chose these numbers. Seeking Alpha is showing, guys, a revenue forward of 11.52. So I'm going to say 6, 8, and 10. I think that's fair enough, honestly. I really do think that that's fair enough. Now, when it comes to the projected share buyback, I think that they're going to do something along the lines of like -5, so they're going to continue to issue shares at around 5% in the next 5 years, -4, and then -3. So getting better, but it's still issuing shares. Now, with a required rate of return of 10% across the board, this puts me at the target share price of $10.54 to $12.30. Adjusting for debt, though, this does come up. I'll give them that. In regards to the net debt and the cash and equivalents, they really don't have that much debt. So this is going to come up to now almost $22, all the way up to $25.50. Okay, with a margin of safety of 5, 10, 15%, this is between $18.64 to $24.20. Now, you guys are looking at this and you're like, well, I mean, you're fairly close to the current share price of $35. I'm actually going to stop everybody right there if you're thinking that, because we already reached this target share prices, at least adjusting for debt. We already did, guys. 52-week lows, if you remember it, that showed $22.22. So if you would have bought in at that point, well, you would have been between the low and median assumption. that would have guaranteed you a 10% if you believe these kinds of revenue growth assumptions and even predict share buyback. Obviously, that's not guaranteed, but that's why we put in the required rate of return of 10% to see what we would like in return, right? That is the reason why that's called that. So yeah, you had the opportunity to get this kind of value out of Chewy based off what they're bringing you. However, at the current price, it's looking a little bit expensive. Now, if you believe that they'll do a little bit better, let's just say at around like 15% for the revenue, well, now the target share price for the high assumption adjusting for debt, it is almost $30. Maybe that's a premium that you would like to pay for. I don't necessarily know. At the end of the day, guys, this is not financial advice. Every investment is the present value of all future cash flow. So please have all of these calculators are available for free. I say in every single video. It's not financial advice. This is the reason why I give all of this out for free. I even put in the earnings report in the description because this is not financial advice. I'm not telling you guys what to buy. I'm really not. I personally don't own Chewy. I prefer Smucker's Corporations. I like their fundamentals better, and they still sell dog and cat food. So, and they also have peanut butter, which I love. So it's like a win-win for me when it comes to Smucker's. And at the price that I bought them at, it was absolutely insane. I bought them at a low price of like $119, $118 back in like, I think this was 2021. And right now they're sticking at a price at around like $150 and they have not fallen back down. So I think I did a pretty good investment using this kind of free cash flow with SJM. I may cover them at a later point, but nonetheless though, this is why I give all of this up for free because this is not financial advice. I'm just showing you guys an example as to how to analyze a company. All we're asking for in return for daily content, a lot of daily content, free calculators, the link to the earnings report. All we're asking for, guys, is just like, subscribe, comment. Really does help with the algorithm on YouTube. Hopefully everybody's liking these videos. We really do hope everybody's liking it, especially with the new format with me and Mike doing like a conversation kind of style for the live streams, and even every Friday now we're doing that too. So hopefully everybody's liking it. And yeah, I honestly just plan to grow the more people support. And the best way that you can support is like, subscribe, comment, and of course, word of mouth, share, tell your friends. And now looking at the options chains, for starters, there's a lot of liquidity here, pretty much weekly expirations. And looking at the puts for the March 24th, which you guys are going to see this on March 24th, you're not going to have any form of premium when it comes to this. So I'm actually just going to skip on this one and go to March 31st, so next week. So looking at these guys, we got some liquidity here. Actually, sorry, I completely take that back. What I meant to say is you got some premiums here that look very, very good, at least as if I'm recording this. For a strike of $33, you're getting essentially $60 in premium if you sell a put here. And if you believe that this thing will continue to go up, if you sell a put for a strike of $34.50, you are getting $113 in premium. Not too bad in my personal opinion. Again, this might change when you see this. Now, looking at the calls, honestly, this is where the money is. Take a look at this. For a strike of $35, $128 premium. $35.50, $105. 36 strike, $85 premium. So if you guys do own 100 shares of this company, you know, this might actually be one that you may want to sell covered calls in if you so wish to do so. But please be careful, because if they do take away your shares, I guess it doesn't really matter, since, you know, this company doesn't pay out the dividend, but they could pay out the dividend in the future. So I don't necessarily know about that one, what you guys may want to do. But if, let's say that you did buy this company at the low price around $22 or so, and you are willing to sell this at like $35, that is a pretty nice kind of capital gains, guys, right? That's like a what, like a $13 difference times 100. That's insane. So that's pretty good capital gains in my personal opinion. So yeah, that's maybe something you want to do. All in all, when it comes to Chewy, as I said, I prefer Smucker's. I really do prefer Smucker's. I may cover that one later, but for now, Chewy, I think that they just need to do better, right? I mean, we're seeing that in the net income, it's at least increasing, but it's still in the negative, and that's a problem. That's a major, major problem. So until they get that into the positive for about 2 to 3 years, and consistently growing in the positive for 2 to 3 years, then I might consider actually putting money into them. But as it currently stands, it's just not really my cup of tea. But anyways, guys, that pretty much does it for this video. Like, if you like, comment, subscribe. It really does help with the algorithm on YouTube. You guys can follow us on the YouTube site, link in the description below. So with that said, peace out. I'll see you all in the next stock analysis video.